Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. So it's finally Sunday night following the massive silver price smackdown that we got on Friday, historic day in the precious metals markets. And so we were all kind of waiting, I think, to see the other shoe drop here on this Sunday evening as trading resumes in the precious metals. Well, the good news is that we didn't see a massive crash at the open. Okay, good enough. However, looks like the metals are continuing to come under some pressure. We didn't get some big snapback rally either. And, to be honest, I think the only thing that anybody can say with any real certainty at this point is that we can expect a lot of continued volatility, right, in both directions. So I want to examine a few updates that we've got on the situation here regarding the precious metals. There's a lot to cover, right? We could spend the whole live stream just talking about conspiracy theories, about what happened on Friday. Was it a coordinated attack on the metals? I don't know, probably. I think that there probably was some coordination designed to run the stops on the metals, shake out the weak hands, scare retail investors off. And I suspect that some big players were loading up on some assets related to the precious metals at the same time, right? We watched this play out in real time. Here's this big red candle, and I've got the daily chart pulled up here, and you notice I've drawn a Fibonacci retracement, and it was interesting that we saw this 0.618 retracement hold up as the support. So, maybe the bottom is in, and we're just going to kind of chop, consolidate a bit, and then move on to new highs. I think it's pretty clear that the bull market remains in effect, although I have seen a lot of comments to the contrary on X, a lot of gloating crypto bros, which is kind of interesting considering that Bitcoin here is under considerable pressure as well. I mean, it's held up a little better than the precious metals, I suppose, but it's down to $77,000, slightly below that right now. But we got a lot to cover here. We've got a lot to cover. I want to look at the charts. There's some very interesting developments globally. China wants a world reserve currency, apparently. That was an interesting story. I'm going to talk a bit more about Kevin Warsh, the new nominee for the chairman of the Fed. That announcement, a lot of people think that had a lot to do with this sell-off. Perhaps that was part of that coordination. And before we get into all of these stories, let me just say, if you want to take advantage of the dip that we have seen, it seems to me that now is a better time to buy silver than a couple days ago. If you like silver above $115, then you probably like it even more at 81, because I will say nothing has fundamentally changed here in this market. But if you do want to take advantage of it, then check this out.
For the first time ever, SD Bullion is giving away 2 monster boxes of silver coins, but not just any silver. Learn more today at sdbullion.com/sweepstakes.
All right, so if you want to find out about that new sweepstakes, go over there to SD Bullion, check that out. There's a link down in the description, and you can also take advantage of their sales on gold and silver bullion. All right, so looking at the gold chart here, and we'll get into some, idea about how far things could fall here, but the gold chart, gold also coming under some pressure here on Sunday night, and it's down around 3% right now. And notably, we had been following this pattern here, this consolidation that gold broke out of, actually gapped up and broke out of here on Tuesday, January 20th, and it had been heading up all the way up to about $5,600. Then we got the smackdown, and look, it's retesting this top trend line. So I think actually we may be able to say the bottom is in gold. Of course, anything could happen, but when I say that, I'm talking about probabilities, my best forecast for what's coming. I think part of the reason that we're seeing some continued pressure here on the metals is this story. We've got the CME raising margins once again after the historic decline in gold and silver prices. So following the close of trading tomorrow, Monday, margins on gold are going to rise to 8% from 6%. On silver, it's going to be raised from 11% to 15% margin requirement. And this, according to the CME, is going to take effect from Monday's close follows a normal review of market volatility to ensure adequate collateral coverage. Maybe they want the price to drop, right? That's also a possibility. So when you hike margin requirements, if someone's near their margin limit and then the requirement goes up, that forces them to sell. That's, a tactic that can be used to bring the price of the metals down. And so that may be part of why we're seeing some renewed pressure here. Although it's going to be interesting in about an hour and 10 minutes when the Shanghai Gold Exchange opens. So we've got the most recent data pulled up here from the Shanghai Gold Exchange, but this is from trading last week, right? So they had their own drawdown, but this price is pretty much meaningless. Now, I've had some people tell me that the Shanghai Gold Exchange is not going to be open tomorrow. It seems like there's a lot of rumors about holiday closures. And now I may be mistaken about this, but I did find this on the Shanghai Gold Exchange website, which it's the announcement on trading schedule during public holidays for the year 2026. So if they were going to be closed, I think this is where we would find it. And they say here the market's going to be closed for the New Year holiday. Okay, it's going to reopen January 5th, so that's already happened. Then the next closure is for Chinese New Year, which means that the market's going to be closed on February 15th. And if you notice, this goes in chronological order. So I don't think that they're going to be closed. I think that they're going to open. They open at 9 a.m. Beijing Central Time, which right now, if we refresh this, it's 7:52 a.m. over there in China. So they're going to be opening up in a little over an hour. And that could, flip this whole metals market upside down. We might see a sharp recovery once Chinese trading begins. I mean, if China is still over $100 tomorrow and we're here at 81, I mean, think about the arbitrage that's going to take place, right? Think about all of the silver that is going to flow from west to east. And maybe that's the whole plan here, right? Maybe the insiders in the U.S. and at the Comex and, coordinated decline here, if that is in fact what it was. I mean, maybe it wasn't. Maybe it was just a normal market event. Silver surely had gotten very overextended. So, I mean, a move like this could be the result of normal market action, I suppose. I don't know. I don't know for sure. But regardless, maybe the plan all along was to buy up silver here in the West and arbitrage it to China and make a pretty penny in the process, also depleting Western inventories of critical strategic mineral, silver, ultimately setting the stage for much higher prices here as scramble continues for these critical resources. But we're just not going to know until China opens up, right? But if they do open and they still maintain this incredible premium to Western prices, I think that's going to draw the price here right back up. And also, we are down about 4.71%. That's from Friday's close. But you'll notice from the green candle here on silver's chart that we're actually above where we were at the open, albeit only slightly, right? So it's not like we're getting some cascading sell-off. We're actually getting, we had an initial dip down into the high 70s and a bounce here. Now, how low could this whole thing go? Well, the point, first of all, I guess anything could happen, right? Silver could go to $10. I mean, I don't know. In 2020, gold or oil traded at a negative valuation, so like anything can happen. But let's talk about what's in the, likely realm of possibilities. So I think that this is probably the bottom right here around 74 and change where we got on Friday. That seems to be likely, although we could touch that again. That being the 0.618 retracement, that being where we saw support on Friday. If we decline beyond that, well, there's always the 786 retracement, which is around $62. And here's silver's 200-day exponential moving average, which is should be rock bottom support. Now that's all the way down at $54. But keep in mind that $50 is the big breakout, right, from the long-term cup and handle pattern that we broke out of at the end of last year. That's around $50. So, I mean, it's possible that we retest $50. If we do, well, if we retest this 200-day moving average at least, that would still not invalidate the current bull market. And, I think it would be the buying opportunity of a lifetime. Personally, that's just my opinion. That's not financial advice. I don't really think it's highly likely that we're going to fall that far unless there's some drastic development over the course of the following days and weeks. I think it's more likely that we kind of chop sideways. Maybe we get a fast recovery. Maybe we retest this, but I think really the lows are in, and the odds are in favor of those who, you know, can be bold here. Again, I'm not telling anybody what to do, but if silver drops further, I'll be adding more to positions. You know, you got to be careful using leverage in this kind of environment, so don't, you know, get too crazy. But the thing is that, you know, if you buy physical ounces, or even if you just buy shares in a mining stock, especially one that pays a dividend, if it goes down more, well, okay. I mean, you don't really take the loss unless you close the position. And in terms of physical, you know, the number of ounces doesn't change. So anyway, that's my take on that. Looking at the other metals, you got platinum down at the open here, 1.15%. Now, platinum got smacked pretty hard, closed down on Friday, almost 19%. But the fact that it's not plummeting, you know, that's a good sign. We don't see any action in the miners yet. We'll have to wait until tomorrow to see how that goes. But palladium also down about 2%. Let's see how copper's doing. Copper is down. Retesting, it looks like this parabolic uptrend that it's been rising within, down about 2%. So nothing too worrisome here at the open here. Now, I mentioned Kevin Warsh. This is a piece in the Atlantic, so I guess, you know, take this with a huge grain of salt. But I'll show you why I think this article, at least one little aspect of it, was interesting. This is regarding Kevin Warsh, the former Fed governor who Trump tapped for the replacement as the chair of the Federal Reserve on Friday, and this seemed to coincide with the beginning of that sell-off. The idea being, oh, this guy's going to be some inflation hawk, right? He's going to be real hawkish. He's going to hike rates. Probably not the case, okay? Even if he does manage to get in there, and Trump could always change his mind, this is something that this is a long piece in the Atlantic about how this guy is, you know, can wax political, like he wants to be a hawk during Democratic administrations, and then he gets a little more dovish with Republicans in there. Yeah, that's possible. I mean, they always say the Fed is independent. It's highly politicized, right? I don't think that's a secret. But I mean, just look at what's happening with Powell right now, right? Coming under huge pressure from the administration. But he did write, and he wrote this in a November Wall Street Journal op-ed, which I don't have access to because it's behind a paywall, and I don't pay for the Wall Street Journal. But just this pretty much summarizes the important position here. He made the argument that the U.S. was on the verge of an AI-driven productivity boom that would be a significant disinflationary force, and that the Fed should abandon the dogma that inflation is caused when the economy grows too much and workers get paid too much. So there's his out, I suppose, to continue printing money, because it's not going to matter, because AI is going to save us. Now, that's such an interesting narrative. You know, we've been hearing that a lot from a lot of the powers that be. You know, Elon Musk saying everybody's going to be rich because of AI. You know, I'll believe it when I see it. I think that sounds a little too good to be true, and maybe it is in the realm of, you know, possibilities, but I think it's a low probability event. But I also think what would be a low probability event would be that Kevin Warsh would be a policy hawk, right? If he was going to be a policy hawk, President Trump wouldn't appoint him as the Fed chair. That's pretty much the bottom line. That's all you need to know, because Trump wants easy monetary policy. He's made no secret of that. Look at what he's been doing to Powell. Look at how he's been pressuring him to cut rates. He's not going to appoint someone who's going to hike rates. So if he's going to appoint this guy, it means it's because he knows one way or another he's going to be a policy dove. And, you know, maybe the idea here is that he wants to avoid the perception of having a crony, you know, a yes man, a Trump loyalist in the Fed chair, and this will give them the cover to actually print more, because they can say, well, Warsh is not a Trump loyalist, he's a policy hawk, so if he says printing is okay, then it must be okay. Maybe that's the angle. I don't know exactly. That's just speculation on my part, but I think it's pretty clear that this guy is going to continue printing. And the bottom line is that, you know, Fed chair, they have to print, because otherwise we'll have a debt crisis and the economic system will collapse, right? You think if banks start failing, this guy's going to be like, well, no, we have to protect the purchasing power of the dollar. Let's not print. Yeah, there's no way, right? It's not going to happen. So that's that. What else do we have? We have some other interesting developments. Iran's supreme leader, he says that if the U.S. attacks, which could happen now at any moment, seemingly, it's going to create a regional war. You know what else that's going to do? That's going to shut down the Strait of Hormuz. Again, hopefully this doesn't happen. It would be awfully crazy for the folks at the helm to allow things to get that far. But, anything's possible here. It's a game of brinksmanship. One miscalculation, and we could be headed for much higher oil prices, much higher safe haven asset prices. And this is just the latest development. Maybe it's not going to play out this weekend. Maybe it's not going to play out this week. But my bet is that geopolitically, the kumbaya singing and hand-holding is not anywhere near. And we're not done with Iran, not by a long shot. So one way or another, there's going to be some kind of an intervention. There's some kind of an attempt at regime change, I suspect. And maybe they need some kind of a casus belli for that. So who knows what that will be? Maybe some kind of false flag thing. I mean, God forbid. Who knows, right? But clearly there's a lot of tension here, and this could flip the whole chessboard over should something occur there. Let's take a look at the most recent open interest for the March silver contract over at the CME group, which remains very high. It's at 91,790. So the open interest did decline following Friday's price action, maybe some forced selling there, some, could be some margin calls, that sort of thing. But still, this was over 100,000 last week. After Friday, we're down to 91,000. Why is that so important? Well, each one of these contracts represents 5,000 ounces of silver, right? So a little over 450 million ounces of silver represented by these contracts, if I'm doing my math there right, which is an important number because this is the most recent silver stock report from the Comex warehouses. You notice the total registered, that's the available silver for delivery, allegedly, is what they have, 108 million ounces. Total eligible, so that's silver that's in their warehouse but, is spoken for, has some kind of claim on it, not necessarily ready for delivery or available for delivery. Total silver in warehouse, 408 million. So right now in March, if everybody, or even like 90% of contracts stood for delivery, it would completely empty the Comex. They would have no physical silver left. What do you think that might do to the price of silver? What do you think the impact of that could be on silver? Could be pretty interesting to watch the coming months play out. Look, I think that the recent sell-off has spoiled the sentiment on silver a little bit. Maybe it needed that, right? I mean, silver was getting to that point on, last week at the highs where I think there was a lot of euphoria, and that's what you see around the top. Who's euphoric about silver now? Not too many people. You're not seeing a lot of that euphoria, and so that's actually a good sign. That means that now is probably a good time to get into silver. Again, not financial advice, just telling you, but it was a much better time than when everybody was euphoric. Oh, it's going to go to $1,000. It's never coming down. And I had talked about the possibility of a correction. I didn't expect one that was as steep as what we saw on Friday. I don't think too many people did. Maybe some people made a bundle. I think JP Morgan had, allegedly, this is one of those conspiracies which I haven't been able to verify, but JP Morgan allegedly had a huge short position which they closed out right at the lows. Leave me a comment if you know if that's accurate or the whole story there. Put it in the chat. Look at that, silver kind of catching a bid here. And again, there's going to be a lot of volatility, right? We could be all over the place tomorrow. We could be up significantly. We could close down. We could go down significantly, close in the green. That's the only thing that we know right now. Things need to settle out after a move like what we saw on Friday. And, the overnight trading that we're seeing right now, it's really just not going to tell us the whole picture. I think we need to get a full day in there to kind of figure out how things are going to settle out. But my bet is on higher silver. I mean, if you were following on Friday, I opened some positions. I bought some more mining stocks. I'm confident that we will be heading higher in silver and the miners over the course of the next year. But, might drop before then. Okay, so I mentioned China and why that's important, right? China, they've got this huge premium on silver that's been playing out over the course of the past month as we've seen silver rise dramatically. And, keep in mind that when we look at the monthly chart, silver was up 19% in January. Okay, so even with the Smackdown, we closed the month up 19%. So if you just zoom out and you take the long view, even if you look at a weekly chart, I mean, yeah, that's an ugly candle, but it's not as bad as the daily. I mean, last week it was down 17%, right? So a lot of those gains that were wiped out were from just the previous day or two, the top of that parabolic blow-off. But again, I mentioned China, right? So China, getting back on track here. I mentioned China and how they're accumulating all this silver and they're likely draining the West. Well, why would they be doing that? Why are they accumulating gold? We know they're buying gold. The People's Bank of China has been buying gold for like 14 months straight, despite the fact that it's running up. I bet they're buying a lot right now with the pullback in price. This is exactly when groups like central banks are going to come in, the smart money, and take advantage of the dip. I bet that when the World Gold Council releases the data for January and February, they show a lot of buying by central banks, especially February right now, February 1st, this week. The central banks are probably salivating at the chance to get gold under $5,000 again. Why is that important? Well, look at this. This is something I shared on X earlier today, just a screenshot of this Financial Times headline. Xi Jinping calls for China's renminbi to attain global reserve currency status. By the way, you can follow me at x.com/stacksmarter. Go check me out on X. Lots of good stuff over there. And, I try to do these live streams to keep everybody up to date on what's going on in the silver market, but I post even more up-to-date stuff on X because I can't always drop everything to a live stream, but I can often make an X post. Oh, and by the way, before we talk about this, which is clearly relevant to the dollar and the silver market, we're getting very close on the channel to 100,000 subscribers. I think we're about 200 subscribers away. So right now, if you click subscribe, there's a good chance, if you're watching this live or briefly thereafter, that you might be the 100,000th subscriber. So that's a cool claim to fame. So do me a favor, click that subscribe button. Maybe we'll get a silver play button tonight. Very, very close. And I do appreciate everybody who... really do appreciate everybody who watches these live streams. Okay, and I'm going to pause real quick. And who is it? Sean Angie says, why follow you there when you don't acknowledge your chat here? Well, sorry, Sean. I can't always look over and read the chat. I don't have that powerful a brain where I can talk about this stuff and read the chat. I do check it occasionally. He says, you got people asking you questions and you go on reading copy. Well, on the live streams, there's no copy, I'm afraid. This is just me speaking off the top of my head. And, I do try to acknowledge the chat. But again, the chat is kind of there for everybody to interact. And, occasionally I look at it. But the point is, thanks to everybody who follows this live stream and this channel and who has supported it thus far. And, I'm very appreciative of everyone. So before I... get everybody to leave by droning on about this, let's talk about this story. So China is on a strong currency mission to make the yuan a global reserve. This is from the South China Morning Post. And, this is no secret, I don't think, but he mentioned this in a recent speech, I believe, which is important because it kind of shows you where the Chinese priorities are aligned right now. And he said, so according to this story, he added that a financial powerhouse requires a central bank that could implement effective monetary policy and prudential macro management, I think is what this means to say, globally competitive financial institutions and international financial centers that could attract international capital and exert influence over global pricing. So to some extent, that may be a bit of a jab at the U.S., right, with the weaponization of the dollar and the fact that we've confiscated Russian assets following that 22 invasion, et cetera, right? That's not a good way to attract international capital. The fact that we've been running these massive deficits, we're monetizing them. Now, trust me, I'm not a big fan of the idea of a Chinese yuan reserve currency. I don't see that as being any meaningful upgrade over a U.S. dollar. It's just another fiat currency. But, it might be interesting if we see something like the BRICS nations or China floating the idea of a currency backed by hard assets. We've heard them discuss this. There have been rumors over the past several years. I think, the 2023 BRICS conference I think 2023 was the big year when everybody thought they were going to announce a BRICS gold-backed currency. And we're not there yet, right? They're probably still a ways away from them. That's no easy undertaking, and they may not even want to do that. But it's always something you got to watch out for, right? Clearly, the geopolitical tensions are rising, right, between the U.S. and China. And World War III is not going to be like World War II necessarily, tanks rolling around, bombers doing all the work, frontline infantry, that sort of thing. I mean, there may be some hot proxy conflicts. Taiwan comes to mind. We currently have that going on in Ukraine. We're probably going to see that in Iran as well. But what we are seeing is a battle for resources, right? So we saw Maduro deposed, taken out, whatever you want to call it. It wasn't quite a full regime change, but close enough for government work, as they say. That was likely an attack aimed at China to deprive them of Venezuelan oil. China also a major buyer of Iranian oil. So what do you think this conflict in Iran is really all about? Well, surprise, surprise, it's not human rights. Shocking, right? It's about depriving China, our foremost geopolitical rival, of an ally and of a source of energy. They were, I don't know what the current numbers are. I think the most recent numbers I saw was that China bought something more than 1 million barrels a day of Iranian oil production. Iran has a hard time selling oil to some countries because of Western sanctions, so China's a big buyer. But the point is that we're also seeing China scoop up all the world's critical resources here, like silver. They're making a bid for it. Why do you think that they implemented export controls on silver on January 1st of this year? Why is it that they just built a giant port on the west coast of South America so that they can directly acquire Peruvian? Peru is one of the world's biggest silver producers. I think they're in the third spot, following Mexico in number one and China in number two, getting their raw ore and condensate that they can refine into pure silver. China controls something like 60 to 70% of global silver refining. So clearly they're making a bid to control these things, to control gold. They want an alternative reserve currency. They're not making any bones about that with this recent commentary from Xi. So, they're trying to rival the dollar, just as the U.S. is trying to contain them. What do they call this? A Thucydides trap or something like that, where you have the rising power coming into conflict with the established power. And that's exactly what's going on right now. And I don't think it could be any clearer. And to me, it's hard to forecast exactly how this is going to play out. There's going to be black swans, plenty of black swans along the way, right? It's one of these things where it's very difficult to forecast exactly how things are going to play out, even if you can see a lot of the moving parts. But one thing that I will say is that if you want to be anti-fragile, if you want to be resistant to these forces which are playing out, then it's important to hold physical assets, at least in my view. And interestingly, since this is a live stream and we're looking at the silver price, it looks like it's almost actually in the green now in overnight trading. So we may be experiencing a bounce. I mean, who knows? Tomorrow morning, silver could be back above $100. That sounds crazy, but I mean, it sounds crazy that it's going to fall 33% in a day two, right? So here's the daily chart. Sorry, we were looking at weekly, but you can see we're back into the green now, ever so slightly. And there's going to be massive volatility. Look, if you want to trade, if you want to use the volatility to your advantage, I just say be cautious. I'm not giving anybody advice or telling them what to do, but utilize caution. And if you're lucky and if you're smart, maybe you can make a buck here. But when it comes to, hedging yourself against these forces that are playing out, it's probably more important to just have some physical, tangible assets in your possession that don't have counterparty risk. You're never going to wake up tomorrow and find that, someone has flipped a switch and has confiscated your silver, has bailed it in. It's not going to happen, right? Even if they were to announce something like a confiscation, I mean, I forecast an increase in boating accidents. Let me just say that. I forecast a sharp increase in boating accidents. You know what I'm saying? If you're a long-time stacker. Let's look at, there's two more charts I want to look at before we wrap this thing up. We have got the M2 to silver ratio, or the silver, what is this? This is, M2 divided by silver price. And I've been talking about this chart for a while, for several weeks. If you've been following, I said that when we bump up against this ratio, there's likely to be some resistance. Now, to be fair, I didn't quite realize how much resistance we would get or how much support for this ratio. Remember, as this ratio falls, that means the silver price is going up, right? Because the currency supply is going up the whole time, right? And this is M2 money supply divided by silver. The reason being that this is the old 2011 low for this ratio. And you can see we touched it and we bounced super hard. Now, a few things. We may see more resistance as we approach this line. Surely, I think as we get to about $120 an ounce, which is where you approach this line, there's going to be some gun-shy silver investors considering what just happened, right? So we might have to consolidate. We might have to build a base before we break through that level. But also, at least on this chart, when we do finally get through that, so when we get above, say, $121, $122, we get a good close, and that would be below this trend line, there's really no meaningful support until we get to the 1980 low. I mean, maybe you might make the argument that this point here, which is like a low from 1983, maybe we get a little resistance there on the way down, or a little support. Again, this is like an inverse thing because this falls as silver goes up. So sorry if I'm, confusing you with the terminology there with support and resistance. I think everybody kind of follows what I'm saying. But the major support is going to be down here, which implies like $700-800 silver. And that's with the money supply or the currency supply where it's at right now. Presumably, if this plays out over the course of the next couple of years or several years, there's going to be more currency created significantly, if my forecasts are correct, between now and then. So that means you could be talking over $1,000 silver to get down to this level from 1980. Now, some people will say, well, the 1980 high, that was based on the Hunt brothers trying to corner the market, and you can't use that. Well, I mean, it's a real price. Real silver traded at that level. And if you think somehow that the beginning of World War III and a global race to acquire critical minerals and the CCP trying to divest the West of their physical silver via arbitrage, if you think those aren't more powerful forces than like the Hunt brothers, then you've got another thing coming. We could very well see things that make 1980 look like child's play. 1980 was a huge year for silver, obviously, if you know the history there. But, I mean, what's coming could make that look like child's play in the long run. The other chart I wanted to look at was the gold to silver ratio, because you might notice, we're going to switch this to a daily chart. Bear with me here one moment. So, the gold to silver ratio, you see that it had collapsed down to like the low 40s. And then with the correction that we had on Friday, this soared back. It touched actually, got as high as in the low 60s here. And I've drawn this yellow line here. So keep in mind what this yellow line represents. This is a low from 2021 in the gold to silver ratio. Okay. And we touched that line, and that appeared to be some significant overhead resistance for the gold to silver ratio. Remember, as the gold to silver ratio falls, that means that silver is outperforming gold. And we're watching this tick down in real time. Look, now silver is up 2.5%. It's back over $87. And, we saw some significant support for the gold to silver ratio. It had resistance here. So it looks like that has topped out. So that's another indicator here that Friday may very well have been the lows in this sell-off. Yeah, and Lady Blaze says tsunami incoming. You're right, there is a silver tsunami incoming. There's a lot of tsunamis, actually. There's a tsunami of fiat currency around the world, which is going to flood into safe haven assets. That's my view, right? Nothing has fundamentally changed. We're still on the verge of a massive debt crisis. We're still experiencing the effects of de-dollarization and de-globalization, which, I mean, that's not stopping, right? China wants its own reserve currency. Trump wants a Fed chair who is going to cut rates dramatically. The Fed began buying U.S. Treasuries back in December again for the first time since they began their quantitative tightening program. The interest cost on the national debt is absolutely skyrocketing. We saw there's a lot of weakness in global bond markets recently. We saw spiking interest rates on Japanese 30-year treasuries. There's just, there's so many potential pins that could prick the economic bubble that we live in that, there's going to be tsunamis. And last thing I'll leave you with is, this chart. This is an important one, so we're going to revisit this a lot. This is that M2 to silver chart that we were just looking at. You got to keep in mind that in 2011, it was still mostly a Western thing. Now, I know, there are exceptions to this, like in India, for example, they have a huge amount of physical gold and silver, very smart people who like to, stack hard assets. But for the most part, the players in these bull markets have largely been in the West. In 1980, that was way more the case. Now, you've got an M2 money supply in the U.S. I think it's like 22 trillion or something like that. But global M2 money supply is something like $97 trillion. So this time around, it's not going to be like in 2011 and in 1980 when it was a lot of dollars chasing the gold and the silver market. What it's going to be is it's going to be trillions and trillions of dollars, of Chinese yuan, of euros, of Japanese yen, all chasing the same physical supply of precious metals on the planet. So, I mentioned like earlier, a few minutes ago, this could be bigger than 1980. It's almost certainly going to be much bigger than 1980. I mean, it's going to make your head spin what's coming in the precious metals. That's my take, right? And I'm positioning myself accordingly. I've got skin in the game. I'm putting my money where my mouth is. So, we'll have to see how things play out. Anything could happen, of course, but probability-wise, I remain just absolutely incredibly bullish on the precious metals. And, I mean, we're already seeing a nice recovery here now, actually. Silver up 3%. But that could all be wiped out by tomorrow. Keep that in mind. Behave accordingly. Silver takes the escalator up, but it takes the elevator down. Or, I mean, on Friday, it just like plunged into a pit. It didn't even take the elevator. It just jumped down the shaft and let the gravity pull it, right? No assist. But look, keep on stacking. Stay safe and happy stacking. Do me a favor, subscribe to the channel. Thank you so much to everybody who watches these. Thanks for getting us to 100,000 subscribers. Prediction price of silver exactly in a month. Headband guy says. Okay, so I'm paying attention to the chat here for those who don't think I do that. Let's see. What's my prediction of silver exactly in a month? Well, I'll give you a forecast, right? I don't even like to use the word prediction. And it could be anywhere. I think we will be back above $100, though, by the end of February. That's my forecast. That might be conservative. It could be a lot higher than that. But I think it's a relatively safe bet to say we'll be back above $100. But again, anything could happen. Don't take that to the bank. Do your own due diligence. Do your own research. Subscribe to the channel. Follow me on X. Sign up for the newsletter in the link down in the description. Share this with your friends. And stay safe, everybody. Keep on stacking, and I will catch you next time. Smart Silver Stack.